All right, good morning, everybody. We're going to try to find the testimony here. Might be there, I don't know, but we got Bitcoin moving here. If there's nothing being said, I can't imagine that. So just give me a second as I try to find it. We watch price for now. That's just last week's low, is what that is. And then February's low is down there. But we already liquidated last week's low yesterday. You didn't get much of a bounce. You're down there trading today. So, I mean, not really a great technical level to look to take entries off of. And I'm thinking since we went down yesterday based off of no news, we go down again today, or up today based on no news. If I can just find the damn thing.
Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. And I'll note at the outset that this hearing has a hard stop of 1 p.m. This is traditional for the Fed chair, which we intend to strictly observe. I now recognize myself for 4 minutes to give an opening statement. Thank you, Chairman Powell, for your testimony today. This week, you stated that the Fed will,
Good
quote,
morning, everybody.
stay the course
Good
until
morning.
the job is done, and that is to restore price stability.
That's his
This is
job.
positive. But you know as well as I do, you're facing a very strong headwind from the political left. Democrats are pressuring the Fed to stray from its narrow mandate. It's a page out of their same old progressive playbook. When they don't have the votes to achieve something here in Congress, they
You can definitely see him playing partisan politics during all this, can't you?
In the Federal Reserve. President Biden's kowtowing to the far left is what got us into this inflationary mess.
See?
I urge you to reject the ideologues who put their social agenda ahead of economic prosperity.
The Trump administration.
High prices continue to eat away at workers' wages and retirees' incomes. Since President Biden took office,
on this
we've
channel.
experienced
We are
inflation at
only
rates not
concerned
seen, since the late
with
70s
what
and
does the
early
market
80s.
do today and how
Inflation,
can we make money.
Rapidly
That's what we're
accelerated
doing
after
here.
Democrats passed their so-called
We are
American Rescue
looking
Plan,
to take a
which
trade
poured
on
nearly $2
Bitcoin
trillion
to
of
profit.
inflationary fuel into the
We
economy.
are profiteers.
By June of last year, the Consumer Price Index showed inflation skyrocketed from below 2% to nearly 9%. And personal consumption expenditures, the Fed's preferred measure of consumer prices.
Good morning, Ray. Good morning, Will. Good morning,
7%.
FD, Beast Nation, all the
rescued
few ledges in the chat.
Democrats,
Thank
Americans
you guys
were
for being
punished
here.
with pain
Love
at the grocery
y'all.
store and sticker shock at the pump. While inflation is now believed, it is now below its
Let's
mid
see if it bounces off of 21.9. That's a big figure of 22K.
It remains broad-based and continues to hammer Americans' pocketbooks. In fact, a recent Gallup poll shows half of the respondents say they are worse off financially than a year ago. It's clear that there's still a long way to go in the effort to bring down costs. I look forward to hearing you reaffirm your commitment to that work today. Republicans also
I'd rather
want
get
to
this
hear
on
from you
somebody
regarding some
like
concerning
Yahoo
developments at the Federal Reserve
or
on the
something
regulatory
instead of
front.
what I'm watching it
Recently,
on
the
because
Federal
they
Reserve's
may
Vice
try to
Chair
hit
for
me with a
Supervision
strike,
announced a quote-unquote holistic
whereas Yahoo will
review
not.
of bank capital in the Fed's regulatory regime. However, it seems that only a small group within the Fed knows what this means, what it entails, how much review is being vetted by the full board, and the type of quantitative analysis the Fed is performing. The Fed shouldn't operate in the shadows, especially when the regulation in question can have broad and
Managed
significant
Core Watchdog.
economic
Client
effects.
portal.
It's also unclear the motivation
We
for the
continue
Fed's
to advance
holistic
along with the
review,
science.
particularly when so many board members have stated that the banking system is very well capitalized. And any review of capital standards should be targeted. It also appears the
Well,
Federal
there's
Reserve
the
Board is
channel if
laying the
you wanna
groundwork for climate
subscribe to
policy
it.
to be implemented through
Hopefully
the
they
Fed
understand that I
regulation,
am making my own
with
works.
an opening salvo to quote-unquote,
and
of
not
quote-unquote scenario analysis.
just
Addressing an issue like climate
taking
change
content
is
for
important,
that sake.
but a policy that should originate here in Congress by the elected representatives of the people, not the central bank. As you said, the Fed needs to
It
stick
did come
to its
down and
knitting.
tag that
I
support
agree.
right there on Bitcoin. So
There is concern from many that the Fed is picking up new needles and knitting partisan sweaters.
it's hard to get long
It's such a precarious time for
right
our
now
economy here
when
at
it's
home
been
and the
so
global economy.
bearish. It's been so
That would
weak
be
lately.
a mistake.
But it's
Thank
hard
you for
to
being
short
here today. I
into
look
this
forward to your
little
testimony and
spike.
the questions by our members.
Daily
The
Open
chair now recognizes the ranking
is
member of the committee, Ms.
right
Waters,
there.
for 4 minutes for an opening statement.
I'll mark that
Thank
with
you very
a
much,
dotted
Mr. Chairman.
line.
Good morning, Chair Powell. Since your last visit,
That is your
our
daily
country, under
opening
the
price.
leadership of President Biden, has made major progress to improve economic
Your
conditions,
stops,
including adding a
I have
record
no
12
idea
million jobs,
where to put them.
reducing unemployment to its lowest rate in
That would be a
54
wide
years,
stop
while
loss.
also reducing the deficit by $1.7 trillion.
As long as you're under
Unfortunately,
22,105,
many
you're
families are
bearish
still
on the
struggling,
day.
to afford
bearish
basic
on the week.
necessities because of inflation. What's more, interest rate hikes are making borrowing, especially for mortgages,
Markets are
outrageously
unchanged
expensive.
on the day as of right
Since I
now.
raised this concern for you in a November letter, the rate
0.08%
hikes
on the
continue to
SP
have an
500,
outsized
US
impact
30,
on housing costs,
just
which
at
are, as you know, a primary
unchanged,
driver
and
of core inflation.
0.12% on
But, Mr.
NASDAQ.
Chair, I think that you will agree that Congress also has a role. That's why I'm somewhat
But there could be a
disappointed that after
bounce
2
today
months,
since we sold off
Republicans
yesterday.
have taken no
There,
serious
nothing
action
new was
to
spoken
address
of.
inflation.
He
By this
didn't
time
say
last
anything
Congress, House
different.
Democrats had passed
Everything
the
has
American
been the
Rescue
same.
Plan to provide relief from the ongoing pandemic, which included our committee's efforts to provide $70 billion for homeowners.
I'm looking at
renters,
this little place
businesses,
right here
and
for
first
potential
responders.
entries.
If Republicans are looking for
As long as we don't
ideas,
close
committee
under the red
Democrats have put
box.
forth additional bills, like the Build Back Better Act, to bring down costs for Americans, especially
I guess that
housing
means
costs.
we could use
Even
this
more concerning,
close here
we're
as
just
our
months- we're
risk
just
if we get
months
a
away from an
retest back to
economic
the white
catastrophe
line.
beyond what we have ever seen, including spiking
Let's
interest
set up
rates,
a long position.
massive job losses, and global instability.
This,
I'm talking about the threats by Republican leadership to force a default on our
we get a
nation's debt
we got to
if
get
we
a
don't agree
pullback
to
though.
their demands to cut
Come on,
Social
pull back
Security,
first. you
Medicare,
punk.
or other critical programs. You've
think we
urged
missed
Congress
it,
to take
guys.
immediate action
Damn it.
to raise the debt ceiling. But rather than focusing on this very real issue, the first bill that committee Republicans brought to the floor
And there was the
instead
profit target. Son of a
suggested that
biscuit.
Social Security and Medicare are socialist threats.
You did get
to
a
America.
retest right
Since
there where
then,
I was
we have
fumbling
considered
around with
legislation
everything.
related to
Now, if you're a
deregulating
seller, you're looking to
securities,
sell around this
banking
area,
laws,
I would wait
and
for at
countering
least the
threats from
liquidation
China,
of that
but
swing high,
Republicans have
which you
completely
just got.
ignored the biggest economic threat to businesses, consumers, and our economy, defaulting
Remember,
on
use
our
light
debt.
leverage,
Last
small
month,
positions.
I wrote a letter to Chair McHenry urging him to take this matter seriously.
you're gonna trade this
and hold a
volatility.
hearing. But I'm still waiting for a response. I hope Republicans will listen today to the real consequences that even the mere threat of a default would have for everyone in this country. And finally, I'm so pleased that we're
Daily
finally
high
making progress on diversity
right.
and inclusion for key positions at the Fed, including last year's
There. Why are we
historic
talking about
confirmation of
diversity and
Dr. Lisa
inclusion
Cook
when
to
in the
serve as the
Fed?
very first black woman on the Federal Reserve Board, with the board's vice
How
chair
does that got
and
anything to
Kansas City
do
Fed president
with
positions
inflation?
vacant. I think President Biden and Kansas City Fed Board should build on this progress by
Man, we
seriously
missed that, didn't
considering
we?
diverse candidates for these positions. With that, I yield back the balance of my time.
The ranking member yields back the balance of my time, asking unanimous consent to submit for the record my letter to Secretary of the Treasury Janet Yellen from February 28th, asking for an update on the X-date for the debt ceiling. I also ask unanimous consent to submit for the record the latest CBO long-term budget outlook on the unsustainability of our debt, most recently released. And without objection, so ordered. I'll now recognize the Chair of the Financial Institutions Subcommittee Chair, Mr. Barr, for 1 minute.
Thank you, Mr. Chairman. And Chairman Powell, thank you for being here today to discuss the Federal Reserve's monetary policy actions in a time of economic uncertainty, mixed economic
This
data,
would be
historic
resistance.
inflation that continues to plague families and businesses around the country. It is paramount that the Federal Reserve remain vigilant on reducing inflation, anchoring
is
inflation
not the open,
expectations,
my bad.
and restoring price
That's the
stability at the
open.
Fed's 2% target. I also look forward to discussing the Fed's regulatory and supervisory activities. As the Fed reviews the bank capital framework, it
Over
needs to
here,
consider
you're
the
red.
impact to the real economy and our global competitiveness
Bitcoin is
when
still
raising
red.
capital requirements and sidelining capital
This
would
is
work
another
at cross
area to look
purposes
for
with
potential
monetary
shorts.
tightening, constraining the supply side when we need more, not less, investment to fix supply chains and reduce inflation. Tailored regulations are required of the Fed by law, and a
Remember, we're just
one-size-fits-all
trying to
approach would be
catch
the wrong
little
path to
moves
take.
of volatility.
Finally, I urge the
Use
Fed,
light
in other words,
leverage
to stick to
because,
its
like
knitting
I
and
said,
not
the more
attempt to be a
leverage you
climate
use,
regulator. I yield back.
Gentleman's time has expired. We'll now recognize the
the
ranking
less
member of
you
the Financial
make, or the more you
Institutions
got to
Subcommittee.
make in order just to break
Mr.
even.
Foster, for 1 minute.
Thank you, and thank you, Chair Powell, for being here today. Today is the 15th anniversary of when I was first elected to Congress and placed on the Financial Services Committee, just as the economy was about to collapse. And so that was my trial by fire, the emergency response to rescue the economy and the legislative response, the Dodd-Frank Act, that successfully stabilized our financial system. So 15 years later, as I take my place as the ranking member on the Committee of Oversight over U.S. banking and monetary policy, I recall the solemn
You,
oath
sir,
that I
should be
swore
in
to myself
radio.
back then to make sure that this kind of calamity never happens again. The monetary policy report that we're receiving today is largely a narrative of a return to normal. And lead times to manufacturers are back to
Yeah, I know.
pre-COVID
I got
levels.
that
The job
clipper.
market
I
retains
had the Daily
supernatural
Open at the
strength, and inflation
wrong
is
spot.
responding more or less as predicted to the usual measures. And by far, the largest threat on the horizon is
It's
a repeat
fixed
of
now.
the 2011 default crisis. Congress has the power to avoid that, and we
It's
owe it to
fixed
the American
now.
people to do so. And I yield back.
Today, we welcome the testimony of Jerome Powell.
That was the
Chair of
trade I
the
was looking
Board
for.
of Governors of the Federal Reserve System. Chair Powell was
just
appointed,
missed it,
reappointed,
but
and
I
sworn
made
in for a
money
second
yesterday on
four-year
this,
term as
so-
chair on May 23rd, 2022.
I think
Chair
we're going to
Powell
see
also
more
serves as
volatility
chairman of
when
the
he starts
Federal
speaking.
Open Markets Committee and the system's principal monetary policy.
Once they get
which
their
is the system's principal monetary policy making
Political
body.
agendas out of the way.
Chair Powell, we thank you for taking the time to be here. We will recognize you for 5 minutes to give an oral presentation or testimony. Without objection, your written statement will be made part of the record. Chairman Powell, you're recognized.
Chairman McHenry, Ranking Member Waters, and other members of the committee, good morning. And I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. My colleagues and I are acutely aware that high inflation is causing significant hardship, and we're strongly committed to returning inflation to our 2% goal. Over the past year, we've taken forceful
Wearing
actions
a
to tighten
bow
the stance of monetary policy. We've covered a lot of ground,
Yeah.
and the full effects of our tightening so far are
Get a
yet to be
tie,
felt.
bro. Get a tie.
Even so, we have more work to do. Our policy actions are guided by our dual mandate to promote maximum employment and stable prices. Without price stability, the
If you
economy
think it's
does
going to
not
be a
work for
bullish
anyone.
day, then maybe you
particular,
could
without
get
price stability,
entry
we will
based
not
off
achieve
of
a
your
sustained
Fibonacci
period of labor
range,
market conditions that benefit
not the
all.
range of the daily
And
range,
we'll
but
review
the
the current
current
economic situation before
volatility
turning to monetary
range.
policy. The data from January on employment, consumer
Obviously,
spending,
volatility
manufacturing,
just
production, and inflation
peaked.
have partly reversed the softening trends that we had seen in the data just a month ago. Some of this reversal likely reflects the unseasonably warm weather
we're
in
on the
January
wrong
in
damn
much of the
chart.
country. Still, the breadth of the reversal, along with the revisions to the previous quarter, suggest that inflationary pressures are running higher than expected at the time of our previous FOMC meeting. From a broader perspective, inflation has moderated somewhat since the middle of last year, but remains well above our longer-run objective of 2%. The 12-month change in total PCE prices has slowed from its peak of 7% in June to 5.4% in January, as energy prices have declined and supply chain bottlenecks have eased. Over the past 12 months, core PCE inflation, which excludes the volatile food and energy prices, was 4.7%. As supply chain bottlenecks have eased and tighter policy has restrained demand, inflation in the core goods sector has fallen. And while housing services inflation remains too high, the flattening out in rents evident in recently signed leases points to a deceleration in this component of inflation over the year ahead. That said, there is little sign of disinflation thus far in the category of core services excluding housing, which accounts for more than half of core consumer expenditures. To restore price stability, we will need to see lower inflation in this sector, and there will very likely be some softening in labor market conditions. Although nominal wage gains have slowed somewhat in recent months, they remain above what is consistent with 2% inflation and current trends in productivity. Strong wage growth is good for workers, but only if it's not eroded by inflation. Turning to growth, the U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Although consumer spending appears
That's
to be
a fresh
expanding
low
at a
of day
solid
on the
pace this quarter,
SPX.
other recent indicators point to subdued growth of spending and production. The activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight. The unemployment rate was 3.4% in January, its lowest level since 1969. Job gains remain very strong in January, while the supply of labor has continued to lag. As of the end of December, there were 1.9 job openings for each unemployed individual, close to the all-time peak recorded last March, while unemployment insurance claims have remained near historic lows. Turning to monetary policy. With inflation well above our longer-run goal of 2% and with the labor market remaining extremely tight, the FOMC has continued to tighten the stance of monetary policy, raising interest
Fresh
rates by
yearly
4.5
low
percentage
on the
points
Dow
over the
Jones
past year.
Industrial.
We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee slowed the pace of interest rate increases over its past two meetings. We will continue to make our
Looking for
decisions meeting
Bitcoin
by
to make
meeting,
a fresh
taking into
daily
account
high.
the totality of the incoming data and their implications for the outlook for economic activity and inflation. Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go.
Same
and
for
is
the
likely to be
S&P.
bumpy.
We're looking for just a
As I
fresh
mentioned,
daily
the latest
high,
economic data have come in
since it's
stronger
just
than
got to go
expected,
right there.
which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated.
There's
If,
the pullback into
And I
the
stress that no
618
decision has been made on
retracement.
this, but if the totality of the data were to indicate that faster tightening is
Target
warranted,
22,
we'd be prepared to increase the pace of rate hikes.
281.55.
Restoring price stability
You
will
get
likely
that,
require
take
that we
profits,
maintain a
move your
restrictive stance
stops
of
to
monetary
break
policy
even.
for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Restoring price stability is essential to to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Chairman Powell. I'll now recognize myself for 5 minutes.
22,180 would be.
Chairman
big
Powell,
profit
there's been a
level for
lot of
me.
discussion over the last 24 hours about the effect of rate increases on the economy. A lot of debate about what you said yesterday in the Senate. But no one asked you this directly. We have a March meeting coming up, Open Markets Committee meeting coming up in 2 weeks. How do you think about the March meeting? What's your approach to that? What are we likely to see?
Thank you. So I won't repeat what I just said in my testimony, but if I turn to the March meeting, I guess I would say that we have some potentially important data coming up, data to be analyzed. One of them came out at exactly 10 o'clock. That would be the JOLTS report, which of course I haven't seen. Sitting here at 10 o'clock. But we're also getting a jobs report on Friday and a CPI and PPI
stop
inflation
loss
report
at break
next
even.
week. So those will be important and we'll scrutinize them. When we say that we're going to be looking at the totality of the data, which is what I said, that does include these reports yet to come. They're going to be important in our assessment of the higher readings that we have very recently received and of the overall direction of the economy and of our progress in bringing inflation down. And we'll be carefully analyzing them. Again, we have not made any decision about the March meeting. We're not going to do that until we see the additional data. The larger point, though, is that we're not on a preset path and that we will be guided by the incoming data and the evolving outlook.
But you've also said higher longer. Is that still the case?
Yeah, so, and as I said in my testimony, we look at the data since January and also the revisions to the November and December inflation data, and they suggest that the ultimate level of interest rates is likely to be higher than we'd expected.
What are those economic factors?
So going back to January, as I mentioned, the softer inflation readings of November and December were revised up. We got a very strong inflation report for January. We got an extraordinarily strong employment report, very strong consumer spending, strong manufacturing data right across the board. And as I pointed out,
We're just
some of
looking
that
for a
may have
run
been
above
affected
the
by
high.
very warm January weather, but nonetheless, all of it pointed in the same direction.
But don't
Okay, let's
put your
move to
profit
regulation.
target at the high.
Chair Powell, in January,
Put
the
your
Federal
profit
Reserve
target
put out a policy
somewhere
statement
below
noting
the
that digital
high.
asset custody is a permissible activity if done
Because
in
the
a safe
high
and
of
sound
day
manner.
is going to be different depending
However,
on which
if a bank
exchange you're
can
looking
demonstrate
at.
to the Fed that it can conduct that activity in safe and sound manner,
I don't
the
know that
capital
it's going to get
impact
up there.
of the SEC's
This is the
staff
daily
accounting
open.
bulletin
People will be
effectively
looking to sell
precludes
there.
banks from offering digital asset custody service at any scale. Are
Your
you
point
aware
of
the
control,
staff accounting
however,
bulletin by the
today
Securities Exchange
is
Commission
down
and its impact
here.
on custodial services?
I am
That
aware
is
of
why
it.
we
Of
were
course,
looking
it's an
for the
SEC accounting
pullback
list. This is SAB 121.
From this range
right.
Certainly aware
only,
of it,
and you can
we
see
do
that we
follow,
did get that.
general accepted accounting
But
principles in.
I don't know if you get
Yes.
back up in here or
Okay.
not.
Without objection, I'll submit to the.
So I leave
submit
it
for
up
the
to
record,
you where you
my,
decide to set
letter
your
to the
take
bank
profit.
regulators
But
about
definitely
this.
set one.
So while the Fed says it can be done in a safe and sound manner, the Securities Exchange Commission has regulated it so that it cannot be done. Next question is certainly about bank capital standards.
The move
You
has
got
already
questions about this
happened,
yesterday.
but it could happen
Chair
again.
Barr has announced a holistic review of capital requirements. As I said in my opening,
With one of the best savings rates in America, banking with
How are you
Capital One
gonna
is
do
the
a
easiest
li-
decision
this
in the
is a
history
live
of decisions.
stream. You're gonna do a
Even easier than
commercial.
this.
In a live stream,
Stop.
bro?
You're in.
Oh, cool. Yep, even easier than that. What's in your wallet?
And so while the Vice Chair for Supervision has announced that the Fed will engage in a holistic review of capital regulation, is that Fed staff? Is that done at the,
This is
at the
live,
governor's,
so
the board
that's
level?
weird.
What is the process? There are a lot of questions that people have about his statements. And so we want to understand why it's necessary for the Fed to conduct a holistic review and what that process is. So, you know,
Don't
my general
like where the
question
point
is,
of
do you
control
still,
is on the S&P 500.
agree with your previous statements about the adequacy on a generalized basis of our financial system? Or are we to read into this that we're not adequately capitalized and there's a high level of risk in the system that we're unaware of at this point?
Thank you. So the why really just is that as a new Vice Chair for Supervision, Vice Chair Barr has launched into, he's taking a fresh look at everything, including capital. That actually is typical of the last two people to have this job. So that makes a lot of sense. In terms of the process, it's certainly conducted under Vice Chair Barr's leadership.
My stop
with
loss
input from
currently is
staff
setting
and,
at my entry.
discussions with governors on that committee, and I'm kept broadly
My
apprised
stop
of what's
loss
going
on the
but
Bitget platform
bottom line
is
is
sitting
nothing has
right on
been-
my entry. I'm not giving.
Nothing has been
We
proposed
made
to the
money
board. Nothing has
yesterday.
been formalized at this point. It's a lot
I'm
of
not
work that's
really
going on. I think
concerned about it
discussions are going
today.
on,
Made
meetings with
money
industry, and that
twice
kind of thing.
yesterday. We made
When
money
we
on the
get to
move
that,
lower
to the
than the
place
move
where that's
higher.
appropriate, the board will be carefully
So
briefed.
I'm very
Ultimately, we'll
cautious
vote
about
on a
what I'm
proposal,
risking
and
today.
that
I
proposal
don't
will
want
go
to
out for
give those
comment, and
profits
we'll
back.
solicit comment from any and all commenters, and we'll look very carefully at that. So it'll be a
As if
wide
it's
open.
going to make a run,
process
it's
in
going to
the
do
sunshine.
it, hopefully pretty
I yield
soon.
back. Now recognize the gentlewoman from California, the ranking member, Ms. Waters.
Thank you very much. Chair Powell, I agree with what you said on February 1st, that Congress must raise the debt limit because of what you described as the highly risky consequences of failing to do so. You are perhaps the most important expert on the debt limit, which is why
But
I
if
find
you
it very
want, you
concerning
can
that
put your
your
stop loss
recommendation to raise
under
the
the
debt limit in a
702,
timely manner is being ignored by my colleagues.
as that would
on the
get
other
you
side of the
under
aisle.
these
I'm also
5-minute
concerned that the
candles
consequences
there,
of this brinksmanship
and that's
are
still a
imminent.
2-to-1 risk to
Fitch
reward.
Ratings said this week they may seriously look at downgrading the U.S. debt based on the escalating brinksmanship they are observing, even if Congress ultimately addresses the debt limit at the last minute. This is history repeating itself. Standard & Poor's downgraded our debt back in 2011 when Republicans last controlled the House and threatened default. The Bipartisan Policy Center later found that the 2011 debt limit debate cost us $18.9 billion in higher borrowing costs, even though we never defaulted. To put that into perspective, that could have been leveraged to provide up to $200 billion in loans to small businesses through the state Small Business Credit Initiative, or to provide hundreds of thousands of people down payment assistance to buy their first home. So I want to emphasize that House Republicans, including most of the Republicans on this committee, had no qualms about paying our debts when Trump was in office. 3 times they addressed the debt ceiling in a timely manner without holding our country hostage. But Republicans are ready to tear down the hard work of Americans everywhere to weather the pandemic and build back a strong recovery. Chair Powell, can you describe for us the risk you see if Congress continues to delay action on the debt limit, both for our economy and for individuals and families?
Let me start briefly by saying that we have no role and seek no role in what is really at the heart of fiscal policy, except I will limit myself to the 2 things that other Fed chairs have said about this. One is just that Congress raising the debt ceiling is really the only alternative. There are no rabbits in hats to be pulled out on this. 2 really is just that no one should assume that the Fed can protect the economy from the non-payment of the government's bills, let alone a debt default or something of that nature, which we don't think will happen here, but no one should be thinking that we have the tools to protect the economy from all the potential effects of that.
Thank you very much. I don't want to miss what you said. I somewhat quoted you when
You can see
said
the
that Congress must
the
raise
US
the
30
debt limit
doesn't have far to
because
go
of
to
what
make
you
a fresh
described
daily
as a
high.
highly risky
That would be the
consequence of
daily
failing
high
to do
there.
so. Is that your language?
Well, must in the sense that it's really the only way for the debt limit to be raised is Congress must act. Again,
This
these are fiscal
white line
discussions,
right
and
here
we're
is
not- we don't
Bitcoin's
wanna be a part
day
of them.
high.
And, really, they're between elected officials.
This
you
is
are
the
expert
open.
on the subject.
Well,
So there
we
is
spent a lot of
going to
time
be
on this, as
south
you
side
recall.
pressure
As an
here.
expert
Prior
on this subject, you are concerned about the
Did
high
you get it?
risky consequence of failing to do so. Is that correct? Did I correctly quote you?
That's correct.
39, 97,
and so,
30. There's your fresh high on the
again,
S&P 500.
Let me just
So
go a little
might
bit
want to
further.
go ahead and take profits on Bitcoin where
The
it
chair
currently is.
mentioned that he had
If you
either
can
written
get
a
another
letter
push up
or
to 22,
maybe even had
153,
some conversation from Janet Yellen about
just in case.
the time limits that she had attempted to describe. Is it your understanding that she said she could maneuver and kind of manipulate things so that
I
she
am
paid the
taking
bills that were coming
70%.
due, but this could only last until about June? Is that your understanding?
Honestly, I would
Where are
really
we
have
at?
to not try to
Current
interpret the
price
Secretary's words
168. So I'm
That's
going to
really
put it
up
at
to her
180
to do.
Can she keep
because
us
I want my
afloat
risk gone.
until about June?
I don't, honestly, that's not for me to say. These are
So if
really
I can get
questions for
another
the
push
Secretary.
up
I'm
to
sorry,
180,
Ms. Waters.
Have you had any
That'd
conversation
be
with her
27%
about the statement that she
win.
made about being able
Come
to
on, you can do it,
manipulate
180.
the debt and pay
Let's go,
bills that
22,
were coming due
180.
out of another account, et cetera? Did you have that conversation with her?
The conversations that you and I have privately don't go anywhere. I don't talk about them with anybody, and the conversations I have with
Come on, give me
Secretary
another
Yellen,
push.
I don't.
22,
Okay, and I
180.
don't want
That's,
to get
that's
you
Gentlelady
in a
time.
close to the
expired.
open. That is the open. So I'm
Gentlelady
going to drop
time
it a little bit lower. I'm going to
Did I
try.
have
We're
equal
at
time with you?
55. I'll
Sure
do
did.
60.
He went over time.
If I did, thank you. I yield back.
I now recognize the Vice Chair of the full committee, Mr. Hill of Arkansas.
Thank you, Mr. Chairman, and thank you, Chair
22,
Powell, for being with us.
160.
You're welcome anytime. Don't wait till we ask. If you want to volunteer and come, we love having your views on many topics.
Boom.
Thanks for talking
Out.
about your commitment to price
70%.
stability. You know,
Stop
we've had this
losses at
discussion
break
last
even.
June between us.
That's a
I do think that's the primary mission of the
24.5%
Fed, and I think it
gain
should be the
on the
only
equity curve.
priority of the Fed is price stability, because it's the legislative branch and the executive branch that really are responsible for, quote, full employment.
That's
and
how
having
it's
that
done,
policy
baby. for
environment
two.
and making sure that that's right.
Three
So
for
your commitment
three,
to price
actually,
stability is
on
welcome
this.
by this committee. Yesterday in the
Now
Senate,
we'll just leave
you,
what we have
suggested
open
that you
still,
supported a
open
regulatory framework,
to see
a
if we get,
broadly
bullish
regulatory framework for digital
continuation
assets.
for
Is
the
that-
day.
Is that right?
If I show
And
you
is it your
the
view that
hourly,
if we had a regulatory framework
you're
here in the
gonna
United
see
States for digital
that
assets,
you
that
are
there'd be more
clearly into an
transparency
area
and
of
rules of the road
supply.
for both consumers,
So
investors, and
sellers
developers?
will be looking to sell here.
Would it-
That's
if we
why I
had
was
those
wanting
rules
to
of the
take
road for
profits
business
there.
seeking to use
So I was a
and
seller
develop
there.
blockchain,
You'll have new
as a potential,
sellers showing up
new
here
technology
as
in their
well,
business and tokenized payments
to
that,
take
again, that would be
profits,
beneficial to business to
as
know
well
how
as
to go about
open
that.
shorts.
Yes, and to assure that it's all done in a safe and sound manner when we're talking about banks.
Right. And then, my next point would be
The
exactly that, to
target
help
should
banks,
be now.
investment
You should be
brokers,
taking
custodians
profits
understand
now.
how they could even participate in that market in a safe and sound manner. You agree that a regulatory framework would help on that?
Yes,
And then,
You
and
made
then
a
finally,
fresh high
we've
of
grown
day
up
on
in
the
our
S&P
country, and
500.
unique
So if
in the
it's
world
going
that
to
we have a
roll
dual
over,
banking system. And
now would be a good
due to
time
its
for it to
work,
do
here
so.
in Congress over 100 years ago, we have insurance.
This is an
regulated
area of
exclusively
supply,
by the
so you want to
states.
put your take
So,
profits at
would you
22180,
believe that that regulatory framework would also have to preserve some
22183,
sort of role
somewhere in
subject to
here
safety and soundness,
before the draw.
for
I don't
states,
know that it's going to
states
drop.
play some role in that regulatory
I'm just
framework
saying,
for digital assets?
if I was looking to be a seller,
Let me
which
just say, I
I
think
was,
it
it would
certainly
be
works in
in
banking and
here
insurance.
because
No
this
problem
is
with
a
those.
zone of
But
supply.
You think it could? You consider it possible that it could also
You need
work
to
in
be
digital assets?
you need to be taking profits
Thank
now.
you. Turning to a topic that's been a subject
Getting
here
your
for nearly
stop
4
at
years, central
break
bank digital
even at
currencies.
least.
Article 1 of the Constitution reserves coins and money issuance to the Congress, and we've in turn delegated that to the U.S. Treasury, which has, since 1912, engaged the Federal Reserve as their fiscal agent. You've testified here many times before that to issue a central bank digital currency, that would have to be authorized by statute by Congress. Is that still your
Your
testimony?
profit target
That
is
is absolutely the
40K.
case as it relates
Well,
to
you're not
retail
on the
CBDC.
same page
There are
as I am, Bub.
potential forms of a wholesale
You're
CBDC
expecting way too
we
much.
need to look at. It's
You
less
need to
clear.
watch all of my
We've always been
videos.
talking about retail CBDC, and that's something we would certainly need congressional approval for.
And what would be a parameter on something
You're
that's
not gonna
not
get
a
to
retail
40K
CBDC,
today, I
where you
promise
think
you
that
that.
could be issued in some form or fashion without Congress's direct
That's
statutory
almost a
authorization?
guaranteed
It would, so
fact.
it would be, for example, it would just be something between banks, so it would look an awful lot like a bank reserve. And you might ask, well, why would we need it? And that's a really good question, too.
Yeah.
But just something that's literally within a wholesale market.
But that speaks that you might have a blockchain between banks and the Fed using a central bank digital currency token to settle transactions institutionally inside yeah. So that leads me to FedNow, which is supposed to be up and running, I think, this summer, somewhat behind the scene
CBDC.
there. I would like to ask you to formally have this full committee briefed on that by the Federal Reserve. I know the chair of the Kansas City Bank was involved. She's now left. And I think the committee has a lot of questions about FedNow, how its interoperability will work, how it's going to roll out. And also just a question that we've been asked, that why the Fed wire system isn't up 24 hours a day, 7 days a week now to benefit consumers that are using
Right.
Venmo. Do you have a thought on that?
I'm not sure why we're not 24/7 on that, and of course, we'd be delighted to come up and brief the committee on FedNow.
That'd be good. We'll take you up on that and the right person from the Fed. And Mr. Chairman, I yield back.
Someone yields back. We'll now recognize the
The
chair
right
of the,
person
I'm sorry, the
from
ranking
the
member of the
Fed,
Capital
so
Markets
that's
Subcommittee,
basically
Mr.
him
Sherman of
saying,
California for 5
not
minutes.
you.
Thank you. Mr. Chairman, I want to thank you for bringing to our committee's attention several years ago the importance of tough legacy LIBOR, some $16
I
trillion
mean, you're getting
of
plenty of
instruments where the
opportunities,
creditor
guys, to take
wouldn't know
profits
how
if
much
you did
the debtor
enter
was
on the
supposed to pay.
pullback here. You can
This
see you
committee,
did get an
we
entry
passed legislation
right there.
over a year before the LIBOR hit the fan. You
not much,
issued
but with
regulations
leverage,
7 months before the absolute
You can
deadline.
do a lot. You don't need
I
a
hope
big
we
move in order
do
to
this in
make
other
money.
areas, and it's my
Small,
understanding that with those
consistent
final
wins.
regulations, we're done, and we've solved
And
the
so far
LIBOR
on
issue.
the last 2 days,
that
we're
correct?
3 for 3.
That's my understanding as well.
People talk about inflation, and they somehow say that it's a matter of the personalities and politics in the United States. Others argue that the entire world is hit by inflation because Ukraine and COVID. I think we've got the answer to this question in that inflation is considerably higher in the Eurozone than it is in the United States today. And it's very hard to say that Joe Biden is responsible for inflation in Germany. I commend the ranking member for bringing up the debt limit and the harm that's already done to our economy. If we solve the problem tomorrow, we had less investment than we would have had yesterday. And I would say that I commend the president. He's going to issue a budget plan tomorrow. And perhaps in their time, one of our Republican colleagues can tell us when the Republican budget plan will be released. We are all eagerly awaiting it. Housing is a huge part of inflation, and we've left it to local government, but the permitting process there guarantees scarcity, which guarantees high housing costs. Mr. Chair,
Nice job,
we've
Will.
talked back in 2001 and several times even before that about wire fraud.
SPX, that weekly
And
support.
having
Yeah.
just bought a home, I saw the process up front. Everybody's very nervous about one thing, and that is, will the buyer of the house be tricked into wiring their down payment to the wrong account? Or will the seller, the buyer be tricked into, or the escrow agent be tricked into sending the money to someone other than the seller of the property? We talked about this back in 2001, where I urged you with your FedNow system, which I'm glad is on track to move forward, to have what the Brits have. when you send the wire, you identify not only the number of the account you're sending it to, but also the name of the person or entity that's supposed to receive that. At that time, back in 2001, you said that payee matching is not the best way to do it. There are other ways to do it, and that you'd be happy to get back to me as to how you're going to make sure that an email from a Nigerian prince does not get the wired funds, particularly in a
See how
housing
you got
transaction,
that
wired to an
fresh
account
daily
number
high
that
on the
turns out
S&P
to be
500, and
in
now you're
Lagos.
rolling over.
What progress do you have? When
They
can
use
home
high
buyers
liquidity
have a
events
system
like
where
this to
they're sending it
drive
to a named payee as well as to
price
another?
higher, just to run above these swings,
We did come back
liquidate
in a
people
timely
left
way
and
to
right.
on that. But it's a problem you've brought to our attention. You're right, over many years.
Sellers
And
will
we
be stepping
continue to
up here.
Focus on that.
Well, the bureaucrats who are working on this don't want to do what the Brits did. They've proven it can be done. You said you were going to accomplish the same goal in some other way, and it has been a while, and it's not solved, nor are you aware of any solution. I would hope that you would go back and say,
Don't
"We
necessarily
want
want
to
to
add
be a
this
short
anxiety to
seller
every
down
real estate
there
transaction.
because you've been bearish
we
for several
Go back
days.
to the drawing boards, follow
Right.
what the Brits have done, and
That's
have
why we were
payee,
looking for
matching.
bullish entries.
Finally, as to crypto, cryptocurrency says what it means. Hidden money. That's what it means. And if we impose know your customer and anti-money laundering statutes to it, it won't be crypto anymore. What crypto wants is to have part of its ecosystem above the waterline, visible and subject to know your customer, and then have the rest of the iceberg below the waterline.
Gentleman's time.
Did you just compare crypto
now-
to the Titanic, bro?
Go to the gentleman from Texas, Mr. Sessions, now recognized for 5 minutes.
Or
Chairman
the
McHenry, thank you
iceberg
very
that
much.
took out
Chairman
the
Powell, thank
Titanic?
you for joining
You guys
us
are
today. We
completely capable of
appreciate not only your
destroying the
professionalism, but
U.S.
your
economy all by
direction at
yourselves.
Chairman Powell, I know that the Fed considers
Crypto has
divergences,
no
and you
effect
talked about it
on your
as
sorry
you spoke in
policies.
your opening statement about consumer price index.
Leave crypto
personal
alone.
Consumer
All of you. You need to
expenditures,
focus on
inflation, GDP.
the dollar.
And
You
all
need to get
these
your own
things
house
are
in
talked
order.
about in your report, monetary report.
Don't you
March
worry
3,
about us.
2023. Thank you. A couple days ago, I had an opportunity to see that an economist, Arthur Laffer, produced a report that spoke about literally this country doubling GDP. Now, I know we're putting CPI, PCE, inflation, all these things into a mix. But he said that if we made changes in health care to efficiencies, we could double the current GDP rate. My question to you that I hope you can answer is, what do you think about that? Is that something that is in this document that I have missed? And it's seemingly to a person who follows this, as Art Laffer does for 50 years, what do you think is an important way to look at efficiencies in healthcare? Thank you.
So no, that's not in our
Right.
monetary policy report. I'll just say one thing, and that is we do spend something like 17 or 18 in that range % of GDP delivering healthcare. Other similarly wealthy countries spend 10%. So it's the delivery system. It's not that the benefits are incredibly rich or anything like that. It's just that the delivery system is very expensive. That's $1 trillion a year that we spend and get nothing for it. This is fiscal policy, but I'm responding to your. So I would think that he may have meant that if we had a delivery system that saved that $1 trillion that doesn't really get us anything, then that would be great for the economy, which I would agree with.
So you've spoken of supply chain disruptions because it in fact is an inhibitor or an accelerator as we gain that advantage. You just talked about some seemingly which would offer some validation to Mr. Laffer as he spoke about the huge importance of this, is that something you should start paying attention to where policy people, not only at the Fed, but your Fed banks around the country would start looking at and start putting pressure on us to gain those
Oh,
efficiencies as a result of a global view?
So on supply chains generally, they have suddenly been tremendously important in inflation, as you know, for the last couple of years, and for the first time really have been something that we've had to study carefully. In terms of healthcare delivery, that is strictly a question for you and for, you know, the parts of the government that are
Policymakers.
charged with it. The Fed does not have a role to play. And
No.
does not seek a role in that.
Does not see a role. And yet, as I look at this, you've got a role in projecting confidence, you've got a role in education, you've got a role in who's in the workplace, you've got a role. Interest rates, and yet my point is, it's such a staggering number that impacts us. Just love to have you go back. Perhaps we from this committee need to give you some direction on that. But I think your testimony today, it recognizes the staggering impact on that. I don't think it's political. The answer may be political, but I think the actual numbers are not political. It's an inefficiency that is happening across the country, not a regional matter. And so I wanted to get your take on that, and I appreciate you being here as always. Thank you for your confidence and your hard work that you give this country. Mr. Chairman, I yield back my time.
Gentleman yields back. We'll now recognize the ranking member of the Agriculture Committee, Mr. Scott of Georgia, for 5 minutes.
Thank you very much, Chairman, and welcome back, Chairman Powell. Now, Chairman Powell, listen to me very carefully here, because I think we're on the verge of making a terrible mistake. Back in 2008, if you recall, Barney Frank then and Miss Waters asked me to take a look and kind of work with you and the Fed. You were a board member in 2008. And we came to the conclusion that we needed a more equitable playing field between our large banks, like Goldman Sachs, Citigroup, and our regional and smaller banks, like Truist and our community banks. And we changed that. But now I hear that the Fed and the FDIC plan to drop a new rule which seeks to apply the long-term and higher capital requirements that were created, and you and I did this back in 2008, and you remember, that were created for the Goldman Sachs and for them. And now we want to apply these rules to the regional banks. There's a big difference, and we've omitted this difference if you proceed in this manner. I think it's very misguided. It works, and you and I worked on this. You recall this. You were a board member. And we saw that we needed to have a better playing field to protect. And if you all go along with this, it could put many of our regional banks and small community banks out of business.
He sounds
So,
like me. He sounds like you've been hitting the sauce
reverse
already
this.
this
First of all,
morning.
tell me, am I speaking the truth? Are you all planning to all of a sudden here
Of course I haven't.
put these
He
smaller
probably
and regional
hasn't
banks
either.
under the same
It sounds
heavy
like it.
or financial load as your large worldwide banks?
Can you expand a bit on your choice
No,
of take
we're not
profit,
planning
Heath?
that.
Why the
We,
new hive
we
day
believe
versus 1 hour
strongly and always
resistance in this
have
context?
tailored,
Yeah, let me.
to address the different sizes.
Let's listen to a little bit more of this, and then I'll go over the reason as to why
Nothing like
everything
that
that
for the
just
regional.
transpired,
They won't
why
have
we
anything
did what
like
we did.
what the very large, most systemically important banks have in terms of overall regulation.
Yeah, because I remember
The main
clearly
reason
you
was
and I were
because
back, I think
the
we were
markets
on
have been
this side
bearish
then,
lately.
talking about this in
So
the
there's more
same
selling pressure
committee room.
in the
And
marketplace.
you worked with us on that. I'm glad to hear that.
Where
Where's
you
that
take your
coming
profits
from?
is an
I mean,
objective thing that
it's a
you could
concern.
basically decide on your own.
It's just a rumor. Have there been any discussions about removing the playing field and the guardrails we have
But
here?
typically,
the
resistance is a very
differentiations
fine place to
and
take
the,
it, or just under
requirements between
resistance.
the regional banks, community banks, and your larger global banks?
So,
There's nothing to that?
well, I would say this, we're required by the law now, and we're doing this. Dodd-Frank actually required us, or
Yes, we did.
suggested that we should tailor, and then the S-2155 then required it. And anything that we do will reflect appropriate tailoring.
All right, so that's off the board. We're not going to change and put the smaller and regional banks under the same financial obligation role as the large banks. We got that right from you, correct?
Yeah, that's right.
All right, good. Now let me turn to China. I'm really worried about China, and right now, people may not know it, but China is the world's largest economy in terms of purchasing power. Now, at our last meeting, I talked about this move where we didn't blow the balloon up. And this is an example of what I was pointing out.
Gentleman's time's expired. We'll now recognize the Chair of the Science Committee, Mr. Lucas of Oklahoma, for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, I'd like to follow up on the topic of capital standards. One of those things we've discussed many times together. As you know, commodity markets have seen significant volatility in the last few years. And during times of tremendous economic uncertainty, like we've seen, end users turn to the markets to hedge risk, particularly those in the agriculture and energy sectors. And I know that the Fed is early in the review process of potential changes in capital requirements. Can you, well, I'll ask anyway. Can you commit to ensuring that these changes will not increase the cost for banks providing those commodity derivatives to end users?
That's a really specific, can I go look at that? I mean, I'm not actually sure that the work even addresses that. So
Fair
I'd be happy
point.
to come back to you on that.
And that particular response makes me feel better, because after all, those products are very important to my folks and make a great deal of difference in how they're able to address their issues. So, as you discussed earlier, and as you've consistently assured, the Fed's not a climate-making policymaker. You and I have talked about this issue, again, many times in the past. However, I'm concerned that the Fed could be heading in that direction and could be laying the groundwork for climate-related stress tests that would reduce access to capital for entire sectors of the economy. This would also open up the Federal Reserve, potentially to political pressure, and force the Fed, in fact, to make policy decisions related to climate change. We've seen, for example, this administration turn to
Fed
regulators to
doesn't
impose
give it-
climate policy as an alternative to the legislative process. Chairman Powell, how careful are you in ensuring that the Fed does not place itself into the climate debate? And how can Congress ensure that the Fed's regulatory...
You are putting the Fed
Finding
in the
empathy
climate
for our
debate.
clients' challenges,
You guys are the
patience,
ones that are
listening
talking about
in order
climate.
to learn the challenges that our clients are facing. At Lulich and Attorneys,
Why are we
don't
getting
just practice the
commercials
law,
in
we
freaking
drive towards
live
outcomes for our
streams, bro?
clients.
YouTube, what is up
And
with
I
that?
understand that it's a tightly circumscribed role that we're playing, and that we're not looking to,
We're
move
just
into
telling
an
y'all
area where
if you'd
we're
slow
actually
your roll
becoming
on
a
where you
policymaker.
spend money, it
I
doesn't
would
matter
completely agree
where,
with you that
somewhere.
Over time, that border needs to be very
Chill.
carefully guarded. And I will tell you that I will do that as long as I'm at the the Board of Governors.
I very much appreciate that because, again, it's a very important issue to the 3rd District of Oklahoma. Traditional production agriculture, oil and gas, and the actions that the Fed takes have a significant impact back home. So it's vital that we resist the demands to do that sort of thing now or in the future. And I very much appreciate that response. And with that, I'll yield back the balance of my time, Mr. Chairman.
Gentleman yields back. The gentleman from Massachusetts, the ranking member of the Digital Asset Subcommittee, Mr. Lynch, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Chairman, and for your willingness to come here and to update us. Last week, the Treasury Department announced that leaders from Treasury would begin to meet regularly with leaders from the Fed and from the White House.
Oh, you
to
could
discuss a
definitely
possible
tell that guy is
CBDC,
from
central
Boston.
bank, digital currency,
From
and
Boston.
other, payment
Boston.
innovations. In the statement, it
Massachusetts.
was mentioned, and I'll quote from it, it said that the Fed is encouraged to provide periodic public updates as it continues its research and its technical experimentation on central bank digital currencies. I was wondering, first of all, when you might be expecting to share some of these public updates. What's the timing on that?
So we did go out for comment in general on a CBDC a year or so ago, and I do expect we'll go out. I can't give you a date, but we'll certainly go out and engage. We engage with the public on an ongoing basis.
Yeah.
We're also doing research on policy and also on technology. That's what we're up to.
I'm aware of the Boston Fed has a partnership there.
Yeah, we don't want it.
Hamilton Project over
We
there
don't
with
want
the
your
folks from MIT,
CBDCs.
Media Lab, they're doing a great job. But, it says here.
We
that
don't
the
like it.
discussions
We
would
don't want
include, technical experimentation. I was just wondering.
We already
what
got
level
digital
you're talking about
assets.
making decisions on
called
architecture
Bitcoin.
for CBDC, a retail CBDC.
We're not at the stage of making any real decisions. What we're doing is experimenting in kind of early stage experimentation. How would this work? Does it work? What's the best technology? What's the most efficient? We're really at an early stage but we're making progress on sort of technological issues. The policy issues are equally important, though. We haven't decided that this is something that the financial system in the country want or need.
No, we
So
don't.
That's going to be very important.
No, you're
Right.
certain.
Well, I think I speak for the chairman as well.
You don't care if we
Would
want
love
it or
to have
not.
More
We
dialogue
don't want
with
it.
the Fed on that, and maybe bring in the folks from MIT as well.
Cash
and
is
just
king.
make sure that Congress and this committee is as up to date as others. Let me switch over to Fed now. There are some champions of digital currency and stable coins in particular that continue to cite the need for faster payment systems. However, as was earlier mentioned, the Fed now is a service that the Fed is working on to finalize that will allow for instant payments between bank accounts. And the Fed has a target release date for Fed Now between May and July, which is right around the corner. Do you see any reason why cryptocurrencies would provide faster payments than the Fed Now system? And would this offer, with the transparency of Fed Now, would it offer distinct advantages over some of these stable coins that are touting faster payments?
What Fed Now will do is it will enable all the banks, any bank in the United States, not just the big ones, to offer instantly available funds and real-time payments to their customers. That's what it will do. So that's a great thing. A CBDC, I think you're asking whether a CBDC would serve some of that, but a CBDC is going to be years in the evaluation, and I think we can get this into the hands of the public very quickly, and I think we'll have real-time payments in this country very, very soon, and so that's a good thing.
It is.
It's called
I do
Zelle.
have an overriding question, and that is, before the greenback, everybody had their own currency. You had rail companies, you had coal companies, you had state banks that were authorized to issue their own currency. But when the greenback came out, all of those various currencies went to zero because everyone had, because the greenback had the full faith and credit of the United States behind it. I'm worried about a lot of these stable coins and other cryptocurrencies. Do they go to zero when we come up with a CBDC
No.
that has the full faith and credit of the United States behind it. And we've got thousands of these out there, and you've got people investing millions and millions of dollars in these, well, trillions right now. And I'm just thinking, if we had those advantages built into a CBDC, wouldn't those alternatives go to zero if they did not have the transparency and the full faith and credit that we enjoy?
So certainly unbacked cryptocurrencies that don't have any intrinsic value, but nonetheless trade for a positive number, those I've never understood the valuation of those. Stable coins are actually, many of them are really, they're drawing on the credibility of the dollar. They have dollar-based, they're dollar-denominated mainly, and they have dollar-based reserves, although we don't know what's in the reserves because there's no regulation.
Gentleman's time has expired. The gentleman from Missouri, Mr. Lukemeyer, is recognized for 5 minutes. The chair of the National Security Subcommittee.
Thank you, Mr. Chairman. And thank you, Chairman Powell, for being here this morning. The reserve currency status of the dollar to the U.S. has enormous financial and national security benefits. In the wake of Russia's unprovoked invasion of Ukraine, the Fed took action to prevent the Kremlin from accessing more than $300 billion in reserves, roughly half of Russia's reserves. However, this led to an accelerated effort by countries like China to de-dollarize their official foreign exchange reserves. Just last week, there was an article in the Wall Street Journal titled, "Russia Turns to the Yuan," in an effort to ditch the dollar. Not only that, but China's President Xi Jinping pushed for the settlement of energy trades in the Chinese yuan at a summit with Arab leaders in December. The question is, are you concerned about these actions by Russia and China to establish different reserves and conduct transactions in non-U.S. dollars?
So the U.S. dollar is the widely accepted and really the only serious candidate for the world's principal reserve currency, and that's because of our democratic institutions, our liquid markets, the rule of law, and all those kinds of things, and also the fact that the dollar has held its value over time. So other countries who are competing on other playing fields may want to establish different currencies, but really the dollar is the one that's going to be used more broadly in international commerce because we have those aspects and other countries don't.
Well, that's true to now, but my question is, are you concerned about the actions of these countries because if they see themselves being challenged or are concerned, for instance, if China would invade Taiwan, as Russia invaded Ukraine, there were some sanctions put on, and I don't disagree with the sanctions. The last time you were here, though, Mr. Chairman, I asked the question because it's an instructive moment for us from the standpoint that knowing that we put sanctions on Russia, all other different accounts, as well as the oligarchs.
Bitcoin pushing back above the
are
open.
we thinking about doing the same thing to China when they invade Taiwan? And your answer at that point was
S&P
no.
500 holding at the
open. Last week to ask the administration, basically,
Dow
to start thinking
trading
about that in those
still
terms.
under
What
the
kind
old
of,
2023's low.
Situations can you come up with? Are you talking
That's
to
a
allies?
fresh
Are you gonna talk to
yearly
them? Let's start
low,
putting together
ladies and
a
gentlemen,
list
on-
of how you would go about sanctioning
on the Dow.
the different individuals,
Fresh
the different
yearly
accounts,
low.
things like that. So have you started thinking about that at all yet?
Not that,
You say
sorry, this
the
over
business
here.
of sanctions is entirely
I keep
in the hands of the
forgetting
elected government and the
that
Treasury
happened
Department.
yesterday.
We are an implementer as it
That's
relates
the
to banks.
old
That's
low.
it.
Yeah,
We
But
don't make those
we're going
decisions.
to
We're
take your
not
advice
consulted
on
those.
different aspects of this, Mr. Chairman.
Sorry?
We're going to take your advice on the different aspects of
There's
this.
the new low.
Well, I mean, honestly, when the sanctions were being put in place, Treasury was doing it. We weren't doing it.
Okay.
Yeah, I mean, that's the way it works.
Keep on that stuff.
Next question. There was an article again in one of the political newspapers yesterday, I guess it was, and it talked about the problem that we have here with the Fed's balance sheet. It says it now appears similar to a hedge fund whose long-term assets are financed by short-term borrowing, and the bottom line is that it's going to cost money. The Fed now has a
big
negative income
rejection
as a
from
result
up there,
of having
man.
to
That
do this.
doesn't look great.
And so it says here that the Fed will simply borrow the money to pay the bills. Is this true? That the Fed's losing money right now as a result of the way you've got these debt, the borrowings that you've purchased structured?
The place I would start is that the Fed has, we always turn over all of our earnings in every year. We turn them over on an ongoing basis, and we've turned over something like $1.2 trillion in earnings just in the last, decade or so. So we always know that when we raise interest rates,
Okay.
you're going to lose money. And
Okay,
of course,
but
we
you
have the
agree
ability
with the point that we have a negative income right now.
That's
And
right.
this makes my point to my next question, or my concern is, the CFPB gets their money. The CFPB gets their money to run their agency from the Fed.
That's right.
So basically, there's no money for the Fed to pay the CFPB's bills if this is the case, unless you continue to borrow, which is basically what's going to happen now, is you're going to have to borrow money to be able to pay the CFPB's bills. Is that not correct?
No, we don't borrow money. We issue, basically, yes, we can.
We create
don't
it.
shut down the Fed when we have negative income.
Okay.
We can
We
pay
don't
our bills,
borrow
and we
it.
can
So
pay
my
the
question,
CFPB.
my follow-up question then is, do you do any accountability or assessing of the CFPB's spending of these dollars at all?
No, we don't.
So they just get a
Inspector
blank
General
check.
does.
You just told me they just got a blank check. They send you a bill, you send them a check. There's no accountability for them.
No, I think there are limits built into the law, which I don't have in the front of my head.
I have yet to see a limit, Mr. Chairman. I'd love to see what the limits are, because I don't think that they've ever agreed that they have that. But I see my time is up. Mr. Chairman, I yield back.
Gentleman's time has expired. We'll now go to Mr. Foster, the ranking member of the Financial Institutions Monetary Policy Subcommittee.
Thank you. And just a quick
All
comment. I
right.
think it's a mistake to imagine that you can completely hide from the macroeconomic effects of technology in your scenario planning. We just talked briefly about healthcare costs. Obesity, half of our healthcare costs, and there are treatments in these GLP-1 receptor agonists that look like
I'll
just
have
a
to
home run
check out
against
that
obesity.
Lynn Alden
So
podcast
these will
about
be near-term impacts
and what
which,
Bitcoin
which
did
will make
with Peter
macroeconomic
McCormick.
effects.
Brandon,
Just
I
a
haven't
comment.
heard
I
that
hope
one
you have a
yet.
certain fraction of futurists in the room when you're talking about your scenario planning, because a lot of that future is like now. Okay, back to economics. So we have this historically low
Future
unemployment rate of 3.4%. And historically, this would be considered to drive runaway inflation. Your predecessor, Alan Greenspan, repeatedly referred to dangerously low levels of unemployment. And yet we see inflation is coming down. So what is going on here? How can we have these historically low levels of unemployment without having inflation take off? Is it possible that we simply have less frictional unemployment in our system, due perhaps to the fact that people get their new jobs online and have a job lined up before they quit?
So inflation is coming down, but it's very high, is the thing. And some part, I've never said all of it or most of it, but some part of the high inflation that we're experiencing is very likely related to an extremely tight labor market. Wages affect prices and prices affect wages, so I do think that's part of it. More to your point, though, there was a time when there was a tight relationship between inflation and unemployment. In other words, the Phillips curve was steep, and that went away over the period of the Great Moderation. And really, in our thinking, that's because people came to expect 2% inflation, and we had 2% inflation, and then people just stopped focusing on inflation, and it stayed very low. So there was really no relationship, or very, very tiny relationship. We could have very weak economic growth or very strong economic growth, and we wouldn't have inflation respond very much. That was before the pandemic, though.
Okay, well, I hope you don't overlearn, some of the lessons there. It's one of my worries that there've been a number of exogenous shocks to the system here, and it'll take a while to go through them. And if you want to be careful there. Now, in a related issue, when you say refer to the totality of factors, you're looking at a mixture of leading and lagging indicators when you look in this totality of factors. And my question, if perhaps you might be paying too much attention to the lagging indicators and not enough to the leading indicators. The example
Right.
that's referenced in your remarks and is in more detail in the report about the difference between using current rental payments versus the amount that you pay for a new rental contract, and difference in how much they lag. Had you paid more attention, for example, to the leading indicators like current rental contracts, then you probably would have picked up inflation earlier. You would have been, not gotten so far behind the curve on that. And
wouldn't have said that it was transitory.
If you look at current rental prices for new contracts, we're much farther along in fixing
It's
inflation,
transitory.
and that you can take your foot off the brake. And so what's your thinking on that, and whether you may perhaps be systematically not paying enough attention to leading indicators versus lagging ones?
So we've had our eyes on the whole housing inflation thing from the very beginning, and right now what I would say is that every forecaster.
Your question hurts my brain.
Lower rent increases. That's a big part of why people think inflation is going to come down in 2023. I think the thing with transitory was more had to do with goods, and it had to do with the thought that these supply side disruptions would go
I
away
block links in the
quicker than they
chat.
would, that the labor market
If one of the
disruptions would go away
mods
quicker than
can
they
get
did.
it, they can
And in
drop
hindsight-
links.
In hindsight, it just took much longer for
I'll
those
find
disturbances
it
to
though.
go away.
It's no
So
big
with
deal.
hindsight, and if you allow yourself to Monday morning quarterback yourself, you probably would have gone
We'll
up to
check
4%
it out after
earlier.
2
and
o'clock.
not had such a big problem with inflation. And so what is your, are there structural things you can contemplate or even after action reviews to say what would have happened if we would have paid more attention to the leading indicators or improve the in engineering term, improve the bandwidth of your feedback regulator? It's, this is something, if you want to get the best result, you need a high bandwidth feedback in the system, even when there's averaging on the back end.
So this is something we only think about during waking and sleeping hours, as you can imagine. It's really hard to know what the lessons are. Again, we really thought things would.
We've
nobody
never
had seen
been
the
in this
supply chains
situation
collapse.
before,
No one had
dude.
seen labor force participation
Literally.
plummet. We didn't know, or
In 10
unemployment
years,
were
we'll
14%
not even
and
be
higher
able to
than
make
that,
the
really.
interest
Some of the
payments
times it
on
would take to
the
go
debt
away.
that America
If we ever see this
has
pitch again,
now.
we'll know
So
how to swing at it, but it's been
We'll now recognize the
pretty bunch of firsts. Sorry.
gentleman's time has expired. The gentleman, his time has expired. We'll now go to the gentlewoman from Missouri, the chair of the Capital Markets Subcommittee, Ms. Wagner, for 5 minutes.
Hi, thank you, Chairman McHenry. And Chair Powell, welcome. Thank you for your service and for being here today. Yesterday, I was pleased to hear you discuss how inflation is severely hurting the working people in America. In your testimony, you also state that strong wage growth is good for workers, but only if it is not eroded by inflation. And that is key. Inflation is a tax, a hidden tax on every American. If the Federal Reserve were to shirk its mandates to stabilize prices, leaving inflation alarmingly high, what would it cost America's hard-working families in Missouri's 2nd Congressional District and beyond?
Have you
I think the
looked
costs
at the
of failing
price
to restore
of
price
eggs,
stability would
Miss
be
Wagner? I
extremely
paid
high. While the
$9
costs to
for
success, the
18
costs of failure would be
eggs
much higher.
the
You're
other
looking
day.
at
That's
an
50
extended period
cents
where people
a
learn to
piece
expect and live with
for
high
an
and
egg.
volatile inflation, and it's very,
An
very hard
egg.
to
One egg.
have rising real incomes during such a period. So it'd be a bad thing for the country.
It's
Can you
not
reassure the committee
good.
that the Fed remains committed to bringing prices down for our constituents?
It doesn't matter if they make
you.
$15 an hour or
As,
$10
and
an hour.
changing topics here a bit, as
$20
China's
for a
economy
12-pack
reopens,
of eggs
and about
is not gonna be a
18%
good thing
of the world's population
for
resumes
anybody.
its consumption of oil and other key
Especially
goods. What sort of inflationary
people
impact will we
that
see
live
here in the United
paycheck
States?
to paycheck.
So a stronger, a faster reopening of China, which it looks like we may be seeing.
Not a hidden
does have the
tax.
potential to put
It's
upward
a
pressure on
massive
commodity
tax
prices,
that
but it
we
also
are
would
all
mean a
well
faster
aware
sort
of.
Unraveling of the problems in supply chain. So those would be offsetting effects. I think sitting here today, we don't expect the net effect to be big for the United States. It might be bigger for other parts of the world, but we think it ought to be moderate overall.
Well, China is one of the world's top oil importers. And do you expect any inflationary effects on global energy markets as China's oil consumption returns to their previous levels?
Well, I think oil prices could be affected.
Shushing me.
And I think that's a big concern in Europe, for example. We have our own domestic oil, and we've got a lot of natural gas as well.
We sure do. I wish we were actually harvesting more of that liquid natural gas. Chair Powell,
I
you,
have to
Vice Chair
say
Barr,
things,
and many
Sol
others have
Christopher,
recently
otherwise
identified
I'll get
that the
hit with
banking
what they
system is
call
well capitalized
a
and strong.
strike.
Bank
I have
capitalization
to
remained
input my
robust
own
during the shock of the pandemic and related shutdowns of economic
stuff
activity.
on this video. I can't
Capitalization
just play
of
somebody
large
else's
financial
video without
institutions weathered
speaking over it,
severe stress
without
testing
commentary.
mandated by the Fed. And despite all of that, as also previously mentioned by Chairman
Scrutiny,
McHenry, Vice Chair Barr
reactions,
insists on conducting
these
a review
things
of
have
capital
to.
rules. I'm
Besides,
concerned that
this
review
is
is
what
being
we're here for.
conducted in a silo, and that the findings will not be made
Not
fully
this.
available to the public. Taking such an approach in the context of this holistic
We've
capital
already done
requirement
what we were
review
going to do.
would make it impossible to conduct a transparent
So,
rulemaking process.
we're gonna wrap this
denying
up
the public
soon anyways,
information
'cause
necessary to consider
I gotta
and
get my
to
baby
comment.
fed.
I think this is just simply not appropriate in this situation, and I'm concerned by the lack of clarity, I think is the best word, perhaps at this point, by the vice chair. A couple questions. You've served on the Fed board for over 10 years since the financial crisis regulatory framework has been put in place. And over that period, have you seen any real-world evidence that America's banks are undercapitalized?
So American banks are strongly capitalized, and I believe Vice Chair Barr has said that as well. But
Yes.
the point is, there haven't been any real proposals to
Banks.
evaluate yet, and when there are, that will be done in a highly transparent manner.
I hope so. I'm glad to hear you say in a highly transparent manner. Do you agree that excessively high capital levels constrain banks' lending capacity?
Banks
spillover
seem to be
effects
doing all
on
right.
jobs and living standards for Americans.
So I think it's always a balance, right? More capital means more safety and soundness and more ability to withstand terribly stressful
Some are
periods.
doing better
But
than
it also,
others.
it's more expensive. Equity capital is more expensive. U.S. banks have competed incredibly well around the world.
Yes,
with
they have,
high levels of
internationally.
capital. But so that's a trade-off that you're always going to be making when you think about capital.
Gentlewoman's
My
time
time
has
has
expired.
expired.
Yes,
Yep.
we'll now recognize the gentlewoman from Ohio, the chair, the ranking member of the National Security Subcommittee, Ms. Beatty. Ms. Beatty, for 5 minutes.
Thank you, Mr. Chair, and I like that title. To Chairman Powell, thank you for coming and being such a good colleague and friend. I have a couple questions I'm going to try to get through
Did
quickly.
she just say she liked
Chair
his
Powell, in
bow
a press
tie?
conference last month, you stated, quote, "There is a lot of spending coming into the construction pipeline, both private and public, and so that's going to support economic activity," end of quote. How do you think the strong pipeline of funding from what the Democrats put together in passing the Inflation Reduction Act, the Infrastructure Investment Jobs Act, and the CHIPS Science Act will do to have economic activity this year and moving forward?
So I guess I was making the point that there are a lot of sources of demand that we can rely on, even though demand has been relatively increasing at a relatively modest rate. Part of it is
Will
just
this
state
help
and
in
local-
that demand?
Yes, I mean there is state and local governments I mentioned are about it.
So would you say this is a great thing that we've done, coming from the left over
Not
here?
not for me to judge the merits of what gets done, but I'm just saying there's
But it will
demand- there's demand
contribute.
there that will support economic
And support it.
activity. Yeah.
So I'm going to assume from that that's a positive. Let me go to the second question. Chairman Powell, the Federal Open Markets Committee is projecting that unemployment will increase to 4.6% by the end of the year. And those costs, as we know, won't be borne equally. If we look at the ratio from the last time unemployment was 4.6% and compare it to our numbers now, it would mean that white unemployment would go up to about 0.9, but black unemployment would go up by 2.3%. Does that sound somewhat accurate to you?
No.
Can you address the disparity impact with that?
In what
And
world?
before you answer, let me go to the book, and thank you that that was put in our
can that be
places
a
together. You made in this book with your signature on, it is stated, However, while
That
disparities
sounds
in
racist.
unemployment
It
have largely
is.
returned to pre-pandemic levels, there still remains significant disparities in absolute levels of employment across groups like African Americans and Hispanics. So can you address that?
That sounds
can. So
racist
right
too.
now, to your point, actually, African-American unemployment is, I think, 5.4%, which is just about as low as it's been since we started tracking it in 1972.
But differential from majority
Well,
by,
I'm going to say, so that's 5.4, whereas the overall is 3.4, and that includes blacks, so that means for whites is well lower than that. What happens is, so there's a persistent gap between black and white unemployment, and also when unemployment goes up quickly in a recession, it goes up much faster for African Americans. When the economy grows again, it comes down faster. So that's just, that's somehow embedded in our economy. We don't really have, the best thing we can do is achieve stable prices so that we can have long expansions. And what happens in those long expansions is that the labor market gets tight, sustainably tight, and we have historic lows in unemployment, including for African Americans.
let me say thank you, and let me also, again, thank you. As you know, in the 117th, I was the chair of the D&I committee, and let the record state that you always pushed for making sure that you understood and respected that. And in that, this is very minor and certainly personal to me. In this report, maybe those who helped you author it, I would like to see the areas that talks about unemployment not under a title of special topics, but something that draws a little more attention to it as some of the others, just very minor. Last question I have. Can you tell me if the Feds is committed to working with the other agencies like the FDIC and the OCC to finalize a rule soon on CRA? Certainly that's something of great interest to many of my colleagues. So can you give us any updates on it or how the process is going or what we can expect?
Yes, so with
All right,
with,
I'm
Governor
gonna go
Branch-
ahead and we're done with that. So to answer your question earlier, our original position that we were looking for was we initially expected Bitcoin to make a run below the low of day. The low of day was already down here. So on this push here, you could see that you did not get it, and it made a substantial move to the upside. If I go back down here to the 5-minute time frame, you can see that substantial move. So this did not clear that low, this low. So once we made the substantial move up away from the low, then what we was looking for was a potential entry right in here. And I was jibber-jabbering too much and was unable to get my fill in here. So what I had to do is wait to see how the market reacted, and then instantly our target was the open of the day. This is the open of the day. You can see right there, that's your opening day or the opening 5-minute candle for the daily range. That was our target from here. So on this 5-minute retest push into this red zone, that was going to be our entry, and our stop loss was going to be under this lowest closing 5-minute candle. The reason being is because we look at those areas as potential traps, simply because it's the lowest closing candle, and then you make a bullish push after. So that was going to be the candle that initially outlined or defined our risk. But we could not get the entry, or I could not get the entry in right there. And the very next 5-minute candle pushed up to our profit target. So by us looking for a pullback, I fibbed this range from this current swing low to this current swing high, because that is the expansion in volatility on the daily range. Once you have an expansion of volatility, some people know this as momentum. whatever you want to call it, right? Vega volatility. Once you get the expansion of volatility, then the high probableness of the move becomes less, right? Because you've already gotten it. This is typically what we're looking for, is to be positioned already when the expansion in volatility occurs. And our original target was going to be that, because it was the daily open. And we know that sellers are typically setting at the daily open if the daily range pushes lower. What we had noticed today, let's get rid of this, and this box, was that the point of control, which is the area where the most volume traded on the daily range, was different than yesterday. Yesterday, this was up here near the highs of day, or somewhere like that. It was different, right? Wasn't down on the current low structure of the daily range. So since the max volume on the daily range has traded here, once we made the volatility expansion, we were wanting to see an instant correction back to it. So I fibbed the volatility range, and we were looking for a pullback anywhere in from this yellow line to this blue line. So that made this box the box that was important for us to get entry. And then we just wanted another push back up to the open again, as since we had already made the push to the open, that allows us to still operate inside of the daily range. See, we never expect continuation. We never expect it to happen. This is your high of day. But you only traded there for literally a second or two before you violently rotated away. So you don't necessarily want to aim for the high of the day, because you might not get there, right? Because we know that the majority of the selling happened at the open. Why do we know that? Because here's your Asian session, there's your open, there's the open of the day. You instantly made a low of day. You retested the open multiple times here last night, and then made an expansion lower. And then there you go. Boom. Right? You traded forcefully away from the open. So the daily range, though we would love to be able to get, buy the low of day and sell at a fresh high of day, that's just not typical. That's not what we see typically. So what all we're trying to do is work inside of this daily range. And we want to do that in candles that have body closures inside of the range. That's what we call our operating range. So there is your supply candle right there. So if I get rid of this, and also notice how your point of control comes right in at the 618 retracement. That is why I took my entry on that retest. Boom, right there. And then this was my profit target. So we did get that secondary expansion back up there, which made it a little bit less probable. But still, nonetheless, as long as you're operating from what we know of as supply and demand, the market tends to bounce inside of those areas. Same thing it did yesterday. But yesterday, you put in a fresh low of day. Big spike to the downside. right? Then it changed. You were up here. Your point of control was up there. This all changed during this candle. Everything got changed around. My original entry on the short yesterday was there. Then we bought the fresh low of day and pushed as volatility made its push back up. We sold it. So essentially we were just looking for the same thing, right? We were looking for a push down, maybe make a fresh low of day, then push back up to the next resistance point. It was, it was a little bit of yeah, there's nothing that says it had to get over this. Technically, that would have been in a normal operating day when there's not a lot of volatility. This would be our operating range from there to there, right? So we would want to be a seller here and a buyer here. Whether you're taking, it doesn't matter the direction of the trade that you want to take. Whether you're a short or a long, that's your area where you want to put your entries or exits simply based on support and resistance. Okay? Your hourly body's closing up into that. This is clearly acting as support. 1 push, 2 push, 3 push, and then instantly traded out on the 5-minute, made a big move out of there. So yeah, we were just essentially wanting to take profits at the open of the day, because the open of the day is the supply candle. This is your supply zone right there. So in a sense, if you were looking to take shorts at the Asian session open yesterday, on this push up into that area, that's where you would have been looking for your short. You would have been putting your profit or your stop loss up above this, and you would have been targeting, well, roughly right there, as that would have been support. And you can see that ultimately you did hit that. So there's multiple opportunities inside of the daily range. You just never want to be a short seller at the lows, right? If you want to be a seller at the highs, because that's typically, the market typically gyrates, right? It's more of an oscillating. It does more oscillating back and forth than it actually does trending anyways. It's sideways most of the time. So that's our operating range. That's where we're typically looking to enter positions and exit positions. So if you were a short still, like if you still had a short side bias, as long as you're not closing hourly candles above 22,198, any retests of that area could be looked at with, short entries. Absolutely. Will it work? I don't know. Down here is support. So if you were to take this entry, you would not be targeting anything under here, because you have a potential demand zone right here. So your entry would be anywhere on the at the line or above the line, anywhere that you could have gotten a fill, and then this would be your target, as that is potential demand. We don't expect continuation ever, but if we get it, it's nice, right? Because when I take my profits, like on this move higher, you can see that I started to see it failing up here. I actually initially had it just under resistance, but it didn't make it to resistance. So me knowing that this is potential supply, then I started chasing price lower, thus making my risk to reward a little bit worse. But at the same time, with the amount of leverage that I had on the position and the size of the position, I was well into profits. So I took 70% of that position off and left the original and left, 30% of the position size open. This way, if I do get a breakout to the upside, and if we do get bullish continuation, then I will be situated down here for it. But these trades, when you're trading very volatile days like this, typically get stopped out. We typically will lose the unrealized P&L. So you could take all the profits if you want. But if you do get continuation, you will miss out on that run. And there have been many times in my career where the actual unrealized P&L ended up paying me more than the original trade did. So when that happens, that's usually, that's icing on the cake. We love when that happens. Absolutely love it. Thank you guys for being here. You guys are fantastic. Make sure you guys have a fantastic rest of your day. I will be watching or finishing up that and getting commentary on both sides, see what people think from it, as we still haven't learned anything new from it, right? We already know that they're looking to raise interest rates until inflation gets their 2% target. That's been the Fed's agenda the whole time. They haven't changed anything. So until they do change that, it looks like the markets are now repricing negativity. A lot of people have changed from their bullish stance to be bearish again. So you can see that in the repositioning. You can see that because the Dow is making fresh yearly lows. Typically, if a market's going to be bullish, you want to see it making fresh yearly highs, not fresh yearly lows. So I'm still holding spot long positions, but my near-term bias on Bitcoin is lower. We're expecting lower prices. If we get higher prices, yay, but with what we see going on here, expansion lower, sideways consolidation with expansion lower. Look for the same thing to continue until you find support. Once price finds support and shifts structure back to bullishness, then we can look to buy swing lows. As of right now, the market is clearly trending towards the downside. The best way to identify this change in behavior or this structural shift is by looking at the daily 21. As long as the weekly 21 looks like this, I will have a bullish bias longer term, but my near-term bias, meaning looking for intraday trades right now, until support is clearly identified, will be looking to short into swing highs. There just wasn't a short trade to take when we took the trade. It was a long trade, right? So you guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.